The market seems to be taking hits from multiple directions, including tariff uncertainty, new disruptions from artificial intelligence, and turmoil in private credit. I'll briefly touch on each of these, but then dig into an important trend that hasn't made the headlines. First, tariffs. After the latest Supreme Court ruling, businesses are facing yet another phase of uncertainty. How exactly will new tariffs be implemented? Will there be refunds for those who have already paid? Neither businesses nor markets like uncertainty, so these questions remain a headwind and will take time to work through. At the same time, context matters. In fiscal 2025, the U.S. government collected about $200 billion in tariffs. While substantial, it's small relative to the federal budget. That same year, the government collected $5 trillion in revenue and spent $7 trillion. That means tariffs accounted for just 3% of federal spending. In aggregate, the tariffs are unlikely to have a major impact on economic growth, though they will certainly impact certain companies. Second, artificial intelligence. ChatGPT burst onto the scene about 3 years ago, and since then, AI tools and capabilities have just exploded. They help with everything from writing emails or video scripts to grilling burgers or even going on a date. The companies building these tools have been rewarded handsomely. But now we're seeing the other side. AI is beginning to disrupt traditional industries. Software companies, asset managers, cybersecurity firms have all been hit by fears that AI can write better code, manage portfolios more efficiently, and defend against cyber attacks better than incumbents. AI is a revolutionary technology, but revolutionary technologies eventually benefit the entire economy, not just their creators. Think cars, electricity, or the internet. Early leaders like Ford, Edison Electric, and AOL all saw massive stock gains. Over time, though, the real winners were the users, and the same will likely be true with AI. The companies that learn to use AI effectively are the ones that are likely to benefit in the long run. Third, private credit. This asset class has grown rapidly over the last few years. When companies need to borrow, they usually turn to banks or public markets. But some companies fall in between. They're too large for smaller banks and too small for public markets, otherwise known as middle market companies. They rely on private loans, which offer faster execution and more customized terms. For investors, private credit has delivered very attractive returns over the last few years. So what's the concern? Recently, some credit issues have surfaced, and a few funds have limited investors' ability to get their money back. These cases appear isolated, but they serve as an important reminder. Investors must do their due diligence and understand exactly what they own. While these headlines have grabbed attention, something else is happening underneath the surface that I think is actually more important and has been less explored. Market leadership is changing. Over the past 3 years, the so-called Magnificent Seven, think Amazon, Apple, Facebook, Google, Microsoft, NVIDIA, and Tesla, have all dominated the market, largely driven by enthusiasm around AI. During that time period, these 7 stocks alone counted for more than half of the return of the S&P 500. But since late October, leadership has shifted. The Mag 7 collectively peaked on October 29th of last year, and since then have declined about 8%. Over that same time period, the S&P 500 is roughly flat. The small cap Russell 2000 is up nearly 6%, and the MSCI EAFE index, which tracks Japan and Europe, is up about 11%. Instead of leading, the Mag 7 are now lagging. So where do we go from here? Tariff uncertainty, AI disruption, private credit concerns are not disappearing overnight, but the shift in market leadership is actually healthy. Small and mid-cap stocks, along with non-U.S. stocks, are less affected by today's noise. This change in leadership means that for diversified investors, returns actually look far better than headlines suggest. Until next time, invest wisely and live richly.